Hello everyone, this is Dr. Hessa Al-Fadhel, the course coordinator of Accounting 112. In this video, I'm going to explain Chapter 8, which talks about cash, fraud, and internal control. Please pay attention. The first learning objective in this chapter is to explain and record the petty cash fund transactions. Now, the first thing, petty cash system of control. So what do I mean by petty cash? Petty cash, it's a small payment of items such as shipping fees, minor repairs, and low-cost supplies. So let me give you here more an example. So if I'm a company, every company, they should have a small petty cash, which is a small cash taken from the budget of the company to pay those small costs. Like the company will send some of the postage, so they need to have some post fees. So from where they are going to pay their post fees, let's say 10 BD. Of course, they're not going to take the 10 BD from the company's budget, but they're going to take the 10 BD from the petty cash. So the petty cash there is established to pay those small payments. Delivery charges, cleaning charges for the company, all those small expenses. The most important part here is how you are going to prepare the establishment of a petty cash fund journal entry. So now, if they told you now, the company, they want to take out of their budget 75 BD to be as a petty cash. So how you are going to establish a petty cash fund entry? You're going to record it as petty cash to cash. How much you want to specify for the petty cash? 75. So if the company wants to establish a petty cash of 100 BD, then they're going to say petty cash to cash 100. So please remember that the company, they decide how much the petty cash is going to be. So you have to remember that petty cash is always debited and the cash is always credited when you're going to establish a petty cash fund journal entry. Now, of course, during the month, you're going to anchor some of expenses. Let's see here the expenses that anchored during a month. The company, they have miscellaneous expenses. Why? Because they clean the tiles of the company and it cost them 46.50. So you can see that the cleaning expenses is 46, which is a small amount. So this should be taken or should be paid from the petty cash because they are such small amounts of money. Then also the company, they have like merchandise inventory and they pay the transportation. So we have your transport of merchandise purchase and it costs them 15.5. So this $15 is already a small amount that should be paid from the petty cash. The company also, they did some delivery expense during November and the customer package delivered at cost $5. Again, it's a small amount that should be taken from the petty cash as well or paid from the petty cash. Also, on 15th of November, the company, they purchased office supplies immediately for use and cost them 4.75. So total expenses of November was 71.30. So from where I'm going to get those, or where I'm going to pay those expenses, of course, I'm going to pay them from the petty cash. Why? Because those are small expenses anchored during the month. So in order to pay it, I need to pay them from the petty cash. So now let's see how we are going to record the reimbursement of petty cash fund. When I say reimbursement of petty cash, it means that how I'm going to record the expenses. So remember, we always need to debit all of the expenses. So if you remember from the previous example or previous table, we saw that the company, they did 4 different expenses. They have miscellaneous expenses, merchandise expenses, delivery expense, and office supplies expense. All of them, they are going to be debited when you are preparing the reimbursed petty cash journal entry. to cash. Okay, so cash should be on the credit side. Remember, not a petty cash. The cash should be on the debit side, a credit side, sorry. And from where did I get 71.30 for the cash? It's the total expenses. So this is what we call it, the reimbursed petty cash journal entry. So if they ask you to prepare reimbursement of petty cash, remember here we're talking about all of the expenses that should be debited to cash, it should be credited. Increasing or decreasing a petty cash fund. Now, let's say, for example, now, if the company decided to increase their petty cash, so how you're going to record the increase in a journal entry? So now, let's say that now we have 75 petty cash, and I want to increase it to 100. So how I'm going to increase 75 to 100? So it means that I'm going to add 25. So how I'm going to record the journal entry? I'm going to say petty cash to cash 25. Why? Because I want to increase my petty cash from 75 to 100. It means that I have to add more 25 to my petty cash in order the total of the petty cash will be 100. So if I want to increase it, I'm going to say petty cash to cash by the difference of the increase, which is 25. Now, in case the company, they want to decrease the cash and the petty cash. So if the company wants to decrease, they think that $75 is too much, they want to decrease it as a petty cash. So what they are going to say, they say, okay, now I have 75 and I want to decrease it to 55. So if I want to decrease it, I'm going to take the difference. 75 minus 55 will give me 20. Okay, so now what I'm going to do, I'm going to record here the entry, but in this case, because I'm decreasing it, I need to decrease it. I'm going to say cash to petty cash. So when you're going to decrease it, I'm going to say cash to petty cash by 20, which is the difference. The second learning objective in this chapter is to prepare a bank reconciliation. So what do I mean by bank reconciliation? Bank reconciliation, we prepare it periodically to explain the differences between the cash reported on the bank statement and the cash balance on the company's book. So basically, when we say bank reconcile or bank reconciliation, it means that I want to make sure that my cash in the bank statement is equal to the cash balance in my company. So they should be equal. If they're not equal, I need to reconcile it. It means I need to equalize it. Now, we are going to see a full example of how to prepare the bank reconciliation in the coming slide. So now we'll talk about the bank reconciliation demonstration. You just need to remember that the bank reconciliation is not part of the financial statements. It's just a statement that we should record on periodical basis just to make sure that the cash on the company is equal to the cash on the bank. So always we start with the name of the company. Here is John Company. And then I have to state that this is a bank reconciliation that I'm preparing for October 31st, 2019. Now, when you're going to prepare the bank reconciliation, you need to remember that on your hand side, you have to report all of the information related to the company. And on your left-hand side, you have to record the information related to the bank. Always on your right-hand side, it will be the company side. Always on your left-hand side, it will be the bank. Then I'm going to put the cash balance or the book balance of the company. Where I'm going to get this number 1,405, this will be given in the question. And also I have to record how much is my bank statement balance, which is 2,050. From where did I get this? I'm going to get this balances for both company and bank from the question. Then I'm going to say add, deduct. Now let's focus first on the company section. Let's focus on the company section. Now we need to know what are the items that should be added, which means what are the items that will increase my cash. Remember the bank reconciliation at the end, the total cash of the company should be equal to the total cash of the bank. So I'm going to add here, if the company collected any notes receivable, remember the notes receivable will increase my cash in the company. So I'm always going to record the collected note receivable on the add section of the company. Any interest earned or interest revenue, it means it is an add for the company. Why it's an add? Because interest revenue, it means that the company, they receive interest. They did not pay this time, but they receive it. So if they receive it, means they receive money. So it means that cash is going to increase. That's why I'm going to put it on the add section of the company. Now, if I took the total of the add, I'm going to say the collected note was $485 plus $8. It's going to give me here $493. Now, let's see what are the items that will deduct the company balance or will reduce the cash of the company. Check printing charges. Now, if I'm a company and I have an account in the bank with the checks, so if I want to have a checkbook, I have to pay money. So the bank can print for me the checkbook. So those charges, they're like an expense. They're going to deduct my cash of the company. So that's why the check printing charges, which is $23, was going to be recorded on the deduct section of the company. Why? Because I'm going to pay money in order to the bank to print out for me a checkbook. So my cash is going to decrease. That's why I'm going to record it under the deduct. Now remember, we have something we call it NSF check. NSF check is always should be recorded under the company and the deduct section. What do I mean by NSF check? NSF check, it means non-sufficient fund check. It means the customer pay me a check, but when I went to the company, when I went to the bank rejected the check because they told me that the amount, this is non-sufficient fund, it's rejected check. So it means that I did not receive the money from the customer. The customer gave me a rejected check. So my cash is going to decrease. Always remember to record the NSF check and the deduct section and the company part. So now $23 plus $30 will give me a total of $53. So what I'm going to do now, I'm going to take the book balance, which is $1,405, plus the total of the add, which is $493, then minus 53, it's going to give me the adjusted book balance will be $1,845. Now let's move on to the bank section. Remember, in the bank section, we're going to know now what are the items that will be added, which will increase my cash in the bank, and what are the items that will be under the deduct section, which will deduct my cash in the bank. So now remember, if you deposit any money in your bank account is going to increase. In this case, we have a deposit of October 31st in Transit, which is $145. If the company deposit money in their account, remember, any deposits in Transit or any other deposit, it always increase my bank cash section. Now, what are the items that will deduct my bank account? If the company, for example, issue a check, outstanding check, the company issue a check. So if I issue a check, for example, check number 124, which is $150, and check number 126, which is $200. It means that when I issue a check, it means that I'm withdrawing money from my bank account. So what will happen to the cash after issuing a check? It means that my cash in my account in the bank is going to decrease. Why? Because I issue a check, it means that I withdraw money out of my account. So remember, any outstanding check, you have to deduct them because it will reduce my cash on the bank section. So now if I take the total of 150 plus 200, it means that I have 350. So now what I'm going to do, I'm going to take the 2050 plus the 145, it's going to give me here 2,195 minus 330, it's going to give me adjusted bank balance of 1,845. If the adjusted book balance is equal to the adjusted bank balance, it means that you did your bank reconciliation correctly. And remember, the bank reconciliation, the main purpose of preparing it is to equalize the cash of the company with the cash in the bank. Now we'll see a different case. Again, bank reconciliation demonstration, but if we have an error. Let's say, for example, if the company by mistake, they record interest revenue 250 instead of recording 520. So it means that the company, they did mistake. Now, who did they mistake? The company. The company, they recorded the interest revenue. Now, we have to remember, interest revenue is going to add the company. It's the add item in the company section. So instead, if I'm recording, I should record it 520, but by mistake, I recorded 250. So how should I edit the error? I'm going to say, okay, I should record it 520, but I recorded 250. So I have to take the difference. How much is the difference? 270. So now what I did basically is I recorded only 250. So now I have to increase my cash by 270. Why? Because I recorded 250 and I should record it 520. So I'm going to take this 270 and I'm going to record it as an error, and I'm going to record 270. Why? Because there was mistake. I should record it 520 and I only recorded 250. To edit the error, I have to add more 270. Now, why did I put it on the company side? Because if you remember that on your right hand side, it's always the company side, because they told me that the company did the mistake. You have to remember, read carefully if there is an error. Who did the mistake, the company or the bank? But here they told me the company did the mistake. So when I'm going to edit it, I'm going to edit only on the company section. Now let's see this example. Again, we have bank reconciliation demonstration, but again we have an error. So they say if the bank by mistake, they recorded the deposit of 1,000 instead of 100. So the company now, or the bank, they did the mistake. It's not the company, because they told me that the bank made the mistake and they recorded the deposit of 1,000 instead of 100. So they should record the deposit 100, not 1,000. So now how we are going to edit the error? I'm going to say 1,000 minus 100. First, I'm going to take the difference, 900. It means now what I need to do, I should record only, now we know that the deposit is always on the add section of the bank, which is on your left hand side. Always the deposit should be on your add section of the bank. Now you recorded the deposit 1,000, but you should record it 100. So you over recorded by 900. Now what you need to do now, you need to reduce or deduct 900. So I'm going to put the error down there on the deduct section. I'm going to say error 900. Now we're not done. So after preparing the bank reconciliation, we're only going to record the adjusting entries for the company side. So now we know that in the bank reconciliation, we have company side, which is on your right hand side, and bank side, which is on your left hand side. Now we are only going to prepare adjusting entry of all of the items included in the bank reconciliation in the company side. So now if you remember that the first item was the collection of note. How I'm going to record the collection of note? Because the company collected the note, I'm going to say cash to notes receivable. How I'm going to record the entry for interest earned? I'm going to say cash to interest revenue. How I'm going to record the check printing? So you remember that the collected collection of note or interest earned, it was on the add section of the company side. Check printing here, I'm going to say how I'm going to record it. I'm going to say miscellaneous expense to cash. Why miscellaneous expense? You can see also check printing expense to cash. Why the cash is reducing? Because the check printing was on the deduct section. So it means the cash is decreasing by 23.23. The last thing, which is an NSF check, you have to remember that whenever you have an NSF check in your bank reconciliation, in the company section, when you're going to record the adjusting entry, you're going to say account receivable to cash. Those are very important. Remember, when you're going to prepare the bank reconciliation, you're not only going to prepare it by itself. When you're done from preparing the bank reconciliation, you have to prepare adjusting entries for the book balance or the company balance. Only the item on the company section, you're going to prepare for them a journal entries. Now you have to remember the purpose of bank reconciliation. This is like a summary for you, that the purpose of the bank reconciliation is just to make sure that the balance of the bank statement is equal to the balance in the company. You always have to remember that we have two sections of the bank reconciliation. The company side, which will be on your right hand side, and the bank side, which will be on your left hand side. And we always start with the cash balances per book and the cash balance per bank. Then we have add. I'm going to add all of the collections and interest revenue minus all of the bank fees if there is, and an SF check plus or minus book error, depends on where is the error. And then I'm going to say how much is my adjusted cash balance. Then on the add section, I'm going to put of the bank deposits in transit, and I'm going to deduct all of the outstanding check, and I'm going to add or deduct the bank error, depends on where was the error. Then I'm going to say the total, which is the adjusted cash balance. Remember, the adjusted bank cash balance should be equal to the adjusted book cash balance. This is the end of chapter 8.